But it doesn't matter if it's good debt or bad debt. It doesn't matter what it is. It's all debt. It's all expense. And the thing I realized is now we have a process to keep that money in the family. The money, Ruben, as you know, because you're doing this, the money grows inside of your family banking system uninterrupted. Uninterrupted compound growth, right?
Who's this? Oh, you're an entrepreneur? Oh, you're a real estate investor. Oh, you're trying to learn from those who did it. Well, come into the lab then. Put your white coat on, gloves on, notepad, and let's build, y'all.
Real estate experiment. What is happening, y'all? Welcome to the lab. A different time in the era here in I can't believe it's 2026, and I have such a pleasure of having this gentleman here in front of me who I've learned from so much and have relied on his organization to really bring me, help me become my own bank, but more importantly, be able to do what I've set out to do from the real estate perspective, to leverage, to pay down debt, to doing all of the above, and of course having obviously the policy in play with my loved one as the beneficiaries. And as we're kind of growing in this next phase of life too, I would love to kind of hear more of how we've unpacked. But I gotta say, before I welcome this gentleman here, I got a level set here and call out that last time I had Brent Kesler in the lab was back in June 2021, and it is 2026. So we're well overdue. He's been serving people and helping them get educated and changing their lives with this tool for years. And it's funny, actually, do I have the content here? There it is. I still have all the resources, right? That's
the Bible.
That is the Bible of becoming your own banker. And so without further ado, Brent Kesler, welcome back to the lab, my man. What's going on? How you feeling?
Hey man, I'm doing awesome, man. I'm doing really, really good. I can't believe that it's been 5 years. I mean, that's incredible. 5 years. It sure doesn't feel like that long.
Yeah,
Because actually I saw this come up on my schedule and I was like, are you sure Ruben wants to have me back on? Because I was just on his podcast, wasn't I?
it felt like you were just there, right?
I didn't realize it was 5 years.
No, that's why I didn't want to let the serendipity go to waste, because I know you work with a third party. When I saw your name pop up, I'm like, I'll take multiple of these mastermind sessions, as I love to call them, because that's really what it was. Because when you came on, Brent, I'm a student of the game, and when I heard you speak, you planted a seed that is now having, a domino effect and how I look at everything. And, a mind that's been stretched can never go back to its old dimensions, right? So once you kind of planted that seed, and I understand now the model, and again, I always say, there's always room. There's a lot of room, and there's a lot of things that I still don't know. I figured, why don't we just huddle back in and see what's been up, and maybe we even take a step back for the people who don't even know what you do and who haven't tuned into episode 138, so we can zoom out and then all selfishly jump in as well and maybe ask some questions that I have that will also benefit someone who's on either at the beginning level, who wants to get started after they have the seed planted, or maybe who's already engaged with their one policy, or maybe second, third, or fourth, fifth. There's a lot of areas when I want to get into when I think of growth and next steps, and maybe you can cover all those bases. So I'm excited to be back here with you, and it's always a plethora of knowledge, a wealth of knowledge, and so thank you for taking the time to hop on.
Yeah, absolutely, man. I'm excited to share again with your community. And just like I said earlier, just ask me anything you want. And it's okay to be a little selfish and ask questions for yourself, because that's going to help so many other people as well. And as you know, this is the real deal. You're doing this in your own life. You're implementing this concept in your own life, and you're seeing, just like what it's doing for your financial life. So,
yes.
I'm excited.
So let's unpack it. So when you and I, let's say you told me there's, you got an event that's happening in Tampa. Let's say I'm at the airport and I got my ticket booked, and I sit next to you, you're a stranger, and I say, hey, my name is Ruben. You say your name is Brent. And I say, hey, what do you do for a living? What do you lead with? And then maybe we can reverse engineer what that actually really means for how you could be of service.
Yeah, great question. Anyway, I help people to recapture all of the money that they're spending on every purchase that they're making. I help people build wealth through their own debts and expenses that they already have. So that's when somebody asks me what I do, that's what I say. I help, okay, the thing is, I help people, I help families build wealth through their own debts and expenses that they already have. And they're like, what does that even mean? Build wealth through their own debts and expenses. Well, again, this concept that we teach, the infinite banking concept, the money multiplier method, it's a concept that's been around for over 200 years that the wealthy have been using. Like if you research the Rockefellers, the Rothschilds, the Morgans, the Stanleys, the Barclays, if you go out and research, like if you research how Walt Disney built Disneyland, how Ray Kroc funded McDonald's, how Pampered Chef got started before Warren Buffett purchased Pampered Chef. This is the concept that they use. So it's not on trial. It's not being tested. And see, here's what people do, Ruben. They go out and they have this thing called money, right? We all use money every day in some form or fashion. And the thing I always ask people, I ask the audience, I says, well, what is the definition of money? And people will give me all of these answers about what the definition of money is. But all money is a means of exchange, is it not? That's all it is. It's a means of exchange. In other words, what we do every day is exchange our money for products and services. The thing we exchange money for food, food for money, money for car, all right, car for money, house for money, money for house. That's all it is a means of exchange. Now, if and when we go out and purchase things, whatever item it is, it doesn't matter. Any item that you purchase with money, here's what you do. You take that money and you give it to somebody else in exchange for the product or service that you are buying. And everybody leaves happy. They have the money, you get the product or service, and we all go about our way. But what if there's a way, Ruben, that you can add one step in your financial life? Just add one step. And now, going forward, every time you take this money and you buy something, a product or a service, not only do you get the product and service that you just bought, but you're able to recapture and recycle all of the money that you just spent. In other words, you get the product and service and the money back. You're like, what is that? Get all the money back. I get the product and service and the money. Absolutely, you do. And as you know, Ruben, if you go to my website, themoneymultiplier.com, and if you click on a tab called Watch Brent Now, I have a 90-plus minute presentation that really dives into deep about how this concept works. And I show you, I prove to you that every car that you're going to purchase for you and your family for the rest of your life going forward, not only do you get the car, but now you get the money back too. You're like, what? Buy the car and get the money back? Yeah, all right, let's talk about that for a minute. Look, I don't even know, okay, the majority of your audience that are on listening to us right now, but I know how they buy their cars. They buy their cars one of three ways. They either pay cash for the car, they bank finance the car, or they lease the car. Doesn't matter any of those ways, because I know all of your viewers are honest and they didn't steal the car, right?
Yeah.
Well, there might be a couple of them that are a little shady, but most of them are pretty honest. So what we had to do, Ruben, we had to give the money to the car dealer. The car dealer gave us the money. They got the money, we got the car, everybody's happy. But by adding this concept, this process, this system, this method to your financial life, now you get the car and you get the money back. And when you go to my website, themoneymultiplier.com, click Watch Brent Now and watch that presentation. Download the attachments if you want, the handouts and the examples. I absolutely prove that you get every dollar back for every car that you just bought. The car and the money. Now, Ruben, let's see, I can't remember if you did this on air after we started recording or before, but here's what you did to me. You held up this book. Can you hold it up? You held it up and showed me you had it. You have this book, Becoming Your Own Banker.
Yes, sir.
The guy that wrote this book, R. Nelson Nash, he was my mentor. Nelson passed away about 7 years ago now. In March of 2019, he passed away at age 87 years old. This book, This man completely changed my financial life.
Yeah.
This is a book that I'm going to recommend to your entire community. You go out and find this book. Wherever you buy books at, wherever you get your book at, go out and find this book and add this book to your wealth building library. Now, the reason I'm bringing this book up right now is because this is the Bible to this concept. I believe everybody should have this book in their wealth building library. But the comment that I made, or the discussion we were just having about you are able to recapture all of the money for all the cars you're going to buy, drive, and own. Well, if you can get the car and the money back, how much did the car cost you? Zero, right? Well, if I can do that with a car, can I do it with any product or service? Could I do it with a bicycle, a boat, a big screen TV, a dining room table, a chandelier, a computer, whatever it is that you're buying, a house, anything, investment property, whatever it is that you're buying, you can get the product and service and get the money back. And if you don't believe me, after you go and watch my presentation, if you still don't believe me, go to this book and I want you to turn to page 70, 70. Page 70 in the book. Now, anyway, Ruben, I don't know if I've ever told you that, or you might have forgot about it if I did. But while we're on the call, I want you to be a little selfish, and I want you to put a little sticky note or something on page 70 to go look at it later. Page 70 of that book absolutely 100% proves everything I'm just telling you. It proves that you get every single dollar back on every purchase that you make. Now, yes, it's in this book, but guess who else talks about it? Well, there's a guy named Robert Kiyosaki, and a lot of people know Robert Kiyosaki because he wrote a book called Rich Dad, Poor Dad. He wrote another book called Second Chance. In that book called Second Chance, Robert Kiyosaki talks about this concept, exactly what I teach. Another person, Tony Robbins. Tony Robbins wrote a book called Money Master the Game. In chapter 5.4 of that Tony Robbins book, Money Master the Game, Tony Robbins talks about this same concept that I'm teaching.
And
Now,
for
those are both-
context, Tony
What's-
Robbins is a billionaire, for those
Yeah,
of you who might not know.
absolutely. So-
He has 120 plus companies, and so he knows a thing or two, and some of those are private equity companies. He knows a thing or two about financial products.
Absolutely. So look, Ruben. Okay, the concept, and I know the thing, we're going to get into it a little bit. We're going to get the high 30,000 foot view. But my point is the concept's not on trial, it's not being tested. It's been around for over 200 years.
Yeah.
Go research the people that I just mentioned, Rockefellers, Rothschilds, Morgans, etc., right? And all we're doing in our financial life is we're going to mimic what the wealthy have been doing for all of that time. So in other words, we're not going to reinvent the wheel. We're not going to go out and start something new. We're just going to copy what they've been doing. And now I have been doing that in my life since 2008. I have been implementing this concept in my life since 2008. Now, I'll tell you that I first learned about the concept in 2006, 2 years before I started using it in my own life. Well, you're thinking, well, Brent, why didn't you start using it in 2006? Because when I heard it presented to me the first time, I was like, there's no way. That's too good to be true. And I'm sure you've heard things like that before. You've watched stuff. It's like, that's too good to be true. Well, that was me. I
Do you
sat in a
remember who
room.
introduced it to you?
What's that?
Do you remember who introduced it
Yes,
to you?
I do. It was a man named Ray, and I was at a chiropractic convention because in my past life, I was a chiropractor. I owned 5 clinics in Kansas City, and I was at a chiropractic conference, and I heard this guy named Ray. He came up, and he was one of the speakers at this conference, and he was talking about money and building wealth and everything that I teach now. He was talking about that, and I was like, wow, that is some powerful information. But there's got to be a catch. There's no way it could work this way. So guess what I did, Ruben? I left that conference in 2006. I went home. I went back to my normal chiropractic life. I totally forgot that I actually purchased this book at that conference. Brought it home, put it on the shelf. You know, So like kind of like I do with
We've
my
never
gym
we've never
equipment
done that
now.
before. We've never
What's
done
that?
that. We've never done that before.
Yeah, no, right. So like it's kind of like I've done with my gym equipment that I have in my house now. I went and bought it and I got good intentions, but where's it at? It's sitting somewhere with dirty clothes on it or clean clothes drying out. But this book now sitting on my shelf. So I didn't do anything with it. I go back to another chiropractic conference almost 2 years later. Well, at that new conference that I go to, about 10 or 12 of my chiropractic colleagues that were at the previous conference are at this conference with me. The only difference between them is they implemented the process when they first heard about it 2 years later. So, guess what they did? They came up to me because, anyway, they knew I was at the conference before, and they were like, Brent, isn't that banking concept the most powerful thing ever to build wealth, to recycle, recapture money, to pay off debt, pay off expenses, all without taking any additional risk, all without working any harder? So they were basically throwing up all over me about it because they thought I was doing it too, but I wasn't. So I kind of remembered after they started talking about it. And I was like, crap, it wasn't just one of them telling me about it. There was a few people telling me about it, 8, 10, 12 people telling me. So I left that conference and I came home and I told my wife, I said, honey, we've got to start implementing this concept in our life. We have to. There's no way 8, 10, 12 of my colleagues are lying to me. Maybe one or two are lying, but
Mm,
not 8, 10, 12 of them are lying. So I said, honey, we got to start doing this in our financial life. It was that day, Ruben, February of 2008. I was
oof.
$984,711 in debt. That's what I owed to the third party creditors. And now you're probably thinking, well, how do you know how much debt you were in? That was part of the exercise. I had to figure out what my debt was. Now, that's a painful exercise to do. Let me tell you,
Yeah.
it's not a fun exercise. You're thinking, well, how does a guy from Kansas get to be almost $1 million in debt? I know if you live in California, it buys you a small house, but in Kansas, especially in 2008, you could buy a lot of crap for $1 million. Well, I had my student loans from chiropractic school, the house that I lived in. At that time, I had two chiropractic clinics. I also had a house on the Lake of the Ozarks between St. Louis and Kansas City. Ruben, if I have a lake house, I have to have a boat and a wave runner, don't I? So I had to have a boat and a wave runner. I'm an airplane pilot. I had to have my own airplane. It didn't take me a lot to become $1 million in debt. I applied these principles into my financial life, paid off all of that debt, Ruben, in 39 months, 3 years and 3 months.
Crazy.
All I
Are you?
did
Yeah.
was added one step in my financial life. I became so passionate about it that I started teaching it 4 years later in 2012. So fast forward 14 years later, I've been teaching this concept around the country, to you included. I have over 17,000 clients in every state of the country. You're one of them. You're
Mhm.
one of the 17,000 in every state of the country. I teach this on live stages, live events, Zoom, podcasts, things like that we're doing tonight. So it's a game changing, life altering financial experience.
Brand, thank you for sharing that. And let me ask you, what was your initial goal when you heard of this concept? Because I know there's a lot of different investors, and some of them might be like, okay, like some of this is good debt because it's real estate debt, but or some of it we might see it's real,
Yeah.
liability. What was your when you sum up that large amount of 989,000 plus or something, right around just under a
Yeah.
million? Were you thinking, listen, I want to be one where in our household we don't have any revolving debt? What was your initial goal?
Yeah. No, actually, not at all. I just knew that I was working hard
Hmm.
and a lot of my money was going out, and that money was going. It was leaving forever. Did you know the average American, Ruben, spends 34 and a half cents of every dollar goes to interest? 34 and a half cents of every dollar goes to interest. It's in this book. It tells you that too. And I go through that on my presentation as well. So I'm just thinking, well, look, if I could just keep some of that interest that I'm sending out to other people and keep that in my family,
Mm,
I mean, I have the potential right there to increase my wealth by 34% just by doing that, right?
Yeah.
Increasing that, not letting that 34 cents of every dollar go out. So, no, I never had the as far as the vision in the beginning, it was like, okay, I got to do something different because see, here's the thing I realized. It's either I'm going to work my butt off and I'm going to get paid, so it's man at work, or I better learn another system,
Mm.
another process. I better start learning and looking into what the wealthy are doing to build wealth, right? I don't want to, because I'm not smart enough to reinvent new stuff. I just copy what other people do and I
Mm.
watch what they do and I take it and I implement it. And that's exactly what I did with this. I didn't
Yeah.
invent any of the stuff that I teach. I mean, I'm all over the internet, YouTube, Facebook. I mean, you can Google my name, Brent Kesler. You can Google the Money Multiplier. Page after page after page, you'll see my stuff out there. And you're like, oh my gosh, this guy has great content. He has great content. Well, yeah, I do, but I learned it all from somebody else or like lots of other people,
Mhm.
and I've had my own experiences throughout the way, and I've just shared my wins and my losses and
Sure.
the good and the pitfalls. But it doesn't matter if it's good debt or bad debt. It doesn't matter what it is. It's all debt. It's all expense. And the thing I
Mm.
realized is now we have a process to keep that money in the family. The money, Ruben, as you know, because you're doing this, the money grows inside of your family banking system uninterrupted, uninterrupted compound growth, right?
Yep.
Powerful thing. Now, compound growth is one thing, but when it's uninterrupted, because see, most people that earn compound interest, they interrupt it at some form or
Yeah.
another because
Pull
they
it out.
pull the money out, do something, and then start back over from scratch. Well, when you can run your money through this concept, okay, through this system, there's no interruption of the compounding because it continues to grow. The money continues to grow even though you're using the money. Isn't that a powerful thing?
Very
And
powerful.
guess
Oh,
what
yeah.
else is powerful? Not only is it uninterrupted compound growth, it's uninterrupted tax free compound growth. So,
Mm.
what does that mean? It means your wealth is growing in a tax free environment and the government is completely out of your hair. Now, a
Mhm.
lot of your listeners know, Ruben, and if they don't, they'll eventually learn it, especially if they get any wealth in their life. They will learn the number one eroder of wealth is taxes. That's our number one eroder of wealth. So, what if you can earn that compounded growth? I'm not saying that you're not going to pay taxes,
Mhm.
but what if you could pay tax on your money one time only, get the money into a tax free growth rate environment where it's growing uninterruptedly, compound growing, and you've already paid tax on the money, and you're never going to pay tax on that money again. You will not pay tax on that money again unless you do something to screw it up. Now you can
Mm.
screw it up, but but it would be you screwing it up.
Yeah. So Brent, for someone who's okay, this I'm sold, but I still haven't heard. How does this work? What is it exactly? How
Yeah.
do you unpack it in layman terms so
Okay.
someone who's listening who needs that paradigm shift can clearly identify where the change is and what they're currently doing?
Yeah, well, kind of earlier you mentioned it already, and I kind of wish you wouldn't have, but that's okay because usually when you mention that word that I'm about to mention, we lose a lot of the viewers. But maybe everybody didn't catch it and we still have some with us. But here's the product that we're going to use to build, keep, and create wealth. Now, I'm about to tell everybody what it is, and I'm just going to warn you, Ruben, whenever I say this and people say, oh, that's what it is, the thing that you're going to see is a lot of people drop off of our interview because they're going to be like, there's no way you can't build wealth that way. There's no way because they think they already know everything there is to know about this, but they don't. So keep an open mind. I'm not here to
Mhm.
convince you of anything. I'm just here to educate and pour into you a concept that you may not already know. You don't have to agree with what I say. Go do your own research. But the product that we're going to use to build, keep, and create wealth is, you ready for it? Here it comes. It is a whole life insurance policy in a mutual company that pays dividends. Oh, I just
Mhm.
said that bad word, life insurance. And people are thinking, what? Life insurance, Brent, you paid off all that debt by using life insurance. You put money into life insurance policies to pay off debt. That's a crazy, stupid idea. As a matter of fact, Dave Ramsey said that would be ridiculous to put money into a life insurance policy. Susie Orman said there's no way. Don't be dumb and do that. Well, listen, you don't know everything there is to know about this, because if you did, you would be implementing this in your own financial life. Now, here's the thing, Ruben. The number one purchasers of whole life insurance in the world
Mhm.
are conventional banks. They are conventional banks. They own more life insurance than all of their land and their buildings combined. As a matter of fact, since 2014, conventional banks have quadrupled the amount of money they have put into life insurance. Why do you think banks are putting so much money into whole life insurance? Is it because they're stupid, or they know something the rest of us don't know? That's right. They know something the rest of us don't know. Now, I want to be clear, Ruben. This is not any type of life insurance policy. No, no, no. This is not the life insurance policy you will go buy from your brother in law that sells life insurance. We all have a brother in law that sells life insurance. Yeah? It's not that type of policy. It's not a term policy. It's not a variable policy. It's not a universal. It's not an IUL, an index universal life policy.
Mhm.
No, no, no. This is a specifically designed, specially engineered whole life insurance policy in a mutual company, very key, mutual company that is designed for high immediate cash value. One more time, high immediate cash value. So, what that means, Ruben, as you already know, because you do this in your own life, when you put money into that policy, you immediately, how soon is immediately? Everybody that knows me, whenever I say immediately, they know it's 30 days. Within 30 days. You put money into this life insurance policy, and immediately, aka within 30 days, you are now using the cash value of that policy to go buy all the stuff you're buying in life anyway, to buy any product or service, investment, real estate, car, bicycle, vacation, student loans, groceries, anything you want, you're now using that money for. So
And
all we're
may I ask,
doing
Brent?
is adding one step.
Experiment Nation, you've heard me talk about how multiple investors across the nation are landing these lucrative midterm rental insurance contracts by making these small tweaks on the branding and marketing side, especially if you're an existing short-term rental operator. There is a quick and easy shift that you can make with the ride guide in place. And because we've launched a 2-day boot camp that not everyone could attend in real time, I've put together a recording where you can get all the materials and all the guides to focus on rebranding either your short-term rental business or your current midterm rental business, so that you can actually have the insurance companies reach out to you. And then day 2 is if you want to actually play offense, how you can reach out to them by listing on the right platforms, etc. If you're looking to get this MTR bootcamp so that you can start optimizing and you can start receiving these lucrative contracts that again provide less headaches, less turnovers, unlike the Airbnb space, you can start receiving inquiries today by having the right guide in place. So please go to experimentrealestate.com/MTR bootcamp or click the link in the bio to make sure you get your hands on the midterm rental insurance bootcamp to fast track your way into landing these lucrative insurance contracts the exact same ways multiple investors have taken advantage of this unknown and untapped niche within the midterm rental umbrella. And may I ask, Brent, for those of you who are familiar and someone like myself, when it comes to utilization, and I actually have a question that came in as well,
Good.
um, is this something that I should let the cash value accumulate before I use it, or should I kind of periodically treat this almost like a not even so much like a reserve, but almost like a credit card? Like, which one is best? Do I tap into it quarterly? Should I pull from it monthly? Again, everyone's situation is different, right? And everyone's cash value is different. But is there any downside of tapping into it frequently? And again, we just bought this new home, right? And there's there's a lot of projects we want to tackle. Is it in my best interest that no, let it accumulate for a little bit, Ruben, then tap in a little later. Or actually, Ruben, tap into it now, whatever there is, even if it's $1,000, tap into it because again, you're not ever going to spend money and have it continuously grow. So if it is accessible, use it. What is your take on that? So we can kind of understand depending on where they land on the spectrum.
Everything you just said and all those options, yes, yes, yes. You can do whatever you want. You get to make the decision,
Yeah.
right? The insurance company doesn't tell you when and how often you can
Hmm.
tap into it. Now, here's what we tell you.
Hmm.
We tell you if you're going to tap into it at the very most one time a month. In other words, don't tap into it every other day or once a week, okay? Now, the thing the thing just okay, the thing as far as what we tell you is we say, look, try just to limit you tapping into it to once a quarter, so 4 times a year. Now, with that being said, you could tap into it every day if you want. Why do we tell you to tap into it no more than once a quarter? Because anytime you're tapping into it, you are involving the administrative staff at the insurance company. And the thing that the insurance company is not set up like a bank to go in and do daily transactions. They're just not set up that way, right? So we don't want to overburden them with all of these small transactions on a daily basis, right? So the insurance company does not like us to overburden them. So they ask us to ask you not to call every day and request a policy loan. All right.
Yeah,
So
yeah.
what we too try to do in our teachings is we say, hey guys, even if you're paying your premium monthly, tap into it once a quarter. If people pay it annually, tap into it once a year, twice a year. And most of the people, and when I say most, 97% of the people do not tap into it more than once a quarter. Now, with that being said, if you really need that money, right? Like if you put in, so like if you pay your premium deposit or payment, I like to use the word deposit, even though it's a payment, because if it's
Hmm.
going into an account that you control, an account you can access, it's really treated more like a deposit than a payment, right?
Hmm.
So I like to use the word deposit, but it is a payment. You just got to get your mind in that right paradigm shift, right? So if it's something that you really need, then yes, you can tap into it immediately. It doesn't affect the growth either way as far as how much you're tapping into.
Say that one more time because I think that's important. It doesn't affect the growth no matter how
Yeah,
many
it
times you
doesn't
tap
affect
into
the
it.
growth whether you took one policy loan a year or 365 policy loans a year. Right, which would be
Can you
one a
explain
day.
that? I think that's very important because that to me is such a good reminder. Like I told you, I'd be asking these questions too, and
Yeah.
it quite frankly, I kind of use it as a I wouldn't even say a lifeline, but I feel like I should definitely be tapping into it more often. And I thought I was even aggressive for having tapped into it in the first place because I almost treat it like a reserve or for bigger purchases. But when I think about it, there's no reason why you would be you not using it, as often as you could because if you're what's the alternative? A credit card, right?
Yeah. Well,
So,
again, the thing is, Ruben, still use your credit card to
mhm.
go make all your purchases. Because see, the thing about a credit card, it's a
Points.
credit card is just actually an asset if
Mm,
you pay it off every month because you can
yeah.
get points. I mean, I don't know when the last time was I bought a commercial airline ticket or paid for a hotel room at like a hotel like a Hyatt or a Hilton because I earn all these points on the credit card purchases that I make. Now, the problem people get into with credit cards is if you have a balance that recurs every month and you're paying all those interest charges.
Mhm.
So, the thing that you're going to do is you're going to continue to spend money the way you spend it, whether you write a check, use a credit card, whatever. But now you've got this money in your banking system. Instead of sitting in your conventional bank, it's now sitting in the Bank of Ruben. Instead of
Mm.
sitting in the Bank of Boston, Massachusetts, it's sitting in the Bank of Ruben, right? Where you're earning the uninterrupted growth, not the shareholders and the stockholders of the bank. And then whenever you want to go tap into it, you're able to go tap into it. And all you're
Mm.
doing is requesting a policy loan. And the question they ask you when you request a policy loan is, okay, How much do you want? And do you want us to send you a check or do you want it automatically deposited into your bank account? Right.
Mm-hmm.
So it's completely flexible. And also, Ruben, you get to decide, as you know, you get to decide how much money you want to put into your banking system. As I said earlier, I have over 17,000 clients. I think my lowest client puts in like $40 a month, and my biggest client puts in over $520,000 a month into their banking system.
Can
You
we
pick the
can we
number.
can we unpack that for a second? Because I think
Yeah.
that's one of the questions that I have is, you know, we have our setup as well where we pay quarterly, etc. And one of the things that I recall is that the limit should be established when you buy the policy, but once you have that, you shouldn't over invest into it or it turns into is it a mech?
Yeah, that is
Okay.
right.
Can you
Yeah.
talk about that? Because where I'm going with this, Brent, is, I have my current policy now, and as I'm going in, growing into the next phase of our life and business is growing, etc. I want to make sure that I don't overfund the current policy.
Yeah.
And so, can you talk a little bit about if I'm bought in, and let's say you are the $40 a month client who's now graduated to $10,000 a month into their policy, or maybe call it quarterly 40 grand. What does the graduation look like, and what are the steps for me to do that? Why is it even important? Maybe let's unpack mech for a second, then help us understand
Okay.
how, at what point, if I want to graduate into a larger kind of, call it a loan,
Right.
and therefore larger commitment, what I should do next so that I don't turn the initial one into a mech.
Yeah. So anyway, I'm going to try to go through all that. If I miss something, you let me know. But they had
Mhm.
great questions there. So first of all, keep in mind, you get to choose the amount you put in the policy, and you get to choose how often you put it in, monthly, quarterly, twice a year, annually. You can always reduce the amount that you put in, right? If you start with a certain amount, you can always lower it. You can always change the method of how you're putting it in. So if you start, like you said, you're quarterly right now, you're putting yours in quarterly. If you decide, hey, I want to put it in annually, I want to put it in monthly, you can always do that. You can always reduce it. If you want to increase it, like for example, your policy, and I'm just going to use an example of $1,000 a month. Let's say somebody is putting in $1,000 a month into their policy, and they're like, "Oh my gosh, this is working really good. I'm putting in 1,000 a month. Now I want to put in more. I want to put in 2,000 a month." Well, the thing that you cannot do is you can't put in 2,000 a month into that policy, because back when you started that policy contract, you
Mhm.
said, "Hey, I want to do 1,000 a month." And because you said 1,000 a month, that policy is designed for that amount of money because it's an insurance contract. So it is buying you X amount of death benefit based on your age and your health for a
Mhm.
thousand a month. So if you come back a month, 6 months, a year later and say, no, I want to put in 2,000 a month, you can't do it because it will become what you mentioned, the MEC, MEC. It stands for Modified Endowment Contract. Now,
Mhm.
anything that's working good for people, the government will come in and try to say, oh, well, let me see how we can get a part of this. So what happened was this exactly happened. All these people were putting in, they were just stuffing and putting more and more money into these policies, primarily the wealthy. So in June of 1988, they came up with this thing called the MEC. And it says that if you try to overfill or overfund your policy,
Mhm.
then it's no longer treated as an insurance contract. It's treated as an investment and it's subject to taxation. So think of it this way. My glass here of water, let's say it holds 12 ounces. I could never get 15 ounces of water in this glass no matter how hard I tried.
Mhm.
It would overfill, right? So the answer to that is what? The answer to that is to go out and start another policy. So let's say you're doing 1,000 a month and now you want to do 2,000 a month. We just go out and start a branch office. Oh, branch office. Well, anyway, Ruben, don't you have that in Boston, Massachusetts, where you're at? I mean, the bank that you bank at is not just one branch. There's not one branch of your bank in Boston. They're all over the damn city. You can go to multiple branches. Well, if you can have multiple branch of banks of the Bank of Boston, you can have multiple branches of the Bank of Ruben. You can have several.
Mm.
I have 30 as we speak. I have
Wow.
30. As I just got my 30th. If we would have talked 2 weeks ago, it was 29. My
What?
daughter Hannah, which you know,
Yeah.
age 26, she has 8 or 9. One of my colleagues has 108. 108 policies, right? So there's
I,
not a right or wrong number, but as you're doing this, as you go through life, most people increase their wealth, right?
mm,
The wealth increases for most of us as we age. Part of that is because we're done raising the children, they're out of the house, they're doing their own thing, and it frees up money. We're not paying for their cars or college education or what, and now you're focusing on the later years of your life. I'm going to be 60 years old here this next year.
good for
So,
you.
right now I can tell you my wealth picture looks way different than it did when I was 30, right?
Mm,
So, and it's going to look a lot different even when I'm 70, especially because I'm utilizing this concept in my life and these policies, Ruben. As you know, it's in your policy contract, as right, it's in your all your paperwork in your policy contract. It continues to grow each and every year, no matter what happens with the external environment. It doesn't matter what happens with the market. It doesn't matter with what's going on with Wall Street. It doesn't matter if there's tariffs. It doesn't matter if real estate goes up or down. It doesn't matter if there's pandemics or protests or riots or if you are a Republican or a Democrat. All that crap doesn't matter. You have guaranteed contractual compounded growth inside of your contract because the insurance companies are not federally regulated, they're state regulated. And the insurance contracts and the money inside of these insurance policies, they do not use fractional reserve banking. So, did you know, Ruben, a conventional bank can loan out 8, 10, $12 for every dollar they have on hand? As a matter of fact, if all of us made a run to the bank today to get our money out of our checking and savings account, you would get less than 10 cents of every dollar because the banks physically don't have that much money to give you. All
mm,
that bull crap about FDIC insured, that would go right out the window. With an insurance company, they have to go by something called Austrian economics. Austrian economics, where $1
mhm.
protects $1. So you can't use fractional reserve banking. So if you want to learn more about Austrian economics and dive down that rabbit hole,
Yeah.
there's a thing in Auburn, Alabama called the Mises Institute. I think it's spelled Mises or Meses, the
Mhm.
Mises Institute, and look up a gentleman named Ludwig von Mises and learn more about Austrian economics. And yeah, that right there will kind of make you open up your eyes about conventional banks. And if you think about it, what happens to banks? Well, banks get bailed out, don't they? Who's
Mm,
making all of the money? Who's making all of the money in the banks? Not you by putting your money there.
yeah.
It's the profit holders and the shareholders.
Shareholders.
Well, in the policy contract, there are no profit holders and shareholders. You are the policy owner. You own the policy contract, so you have first right to your money. Now, when you pay into the insurance company and pay premium, the insurance company puts your money to work, and they put it to work in very safe things, right? Well, and but if you come knocking on the door and
Mhm.
say, "Hey, Mr. Insurance Company, I want to get my cash value out," you are the first one in line. No matter where they have that money, they have to give you that money within a timely manner. And I say it's in the contract, they have to give it to you within 30 days. I always tell you 30 days. the majority of people, when they want to request their money, you're going to get it out, especially if it's going into an if it's an auto deposit
Transfer.
and not a
Yeah.
check being written to you, you're going to have it in your bank account in 3 to 5 business days.
Let me ask you, because on one hand, I could imagine listeners here, you say there's no correlation with stock market, etc., or politics, etc. And then you mentioned there's no fractional lending, but then on the other hand, I heard you say that they're putting it in sound investments. Can you
Yeah,
help us kind of clear
sure.
the line between where exactly, I think we're still trying to unpack the how
Yeah.
this structure works, and I want to make sure we're very clear on how the vehicle engine
Yeah.
works.
Yep. So anyway, the insurance company, all right, the thing that they do is they get premium dollars that come in. And what
Mm,
these insurance companies do is they put about 80% of of their dollars that goes into investment grade bonds.
mm,
About another 7% goes to home and commercial development or buildings. A lot of big commercial developments, a lot of big housing developments that you see, they are financed by blocks of money from insurance companies. And about another 7% goes to policy loans to their policyholders. And that's kind of the area, that's our space that we play in with the infinite banking concept. And then the last 7%, they have to keep in very low interest bearing accounts, almost equivalent to cash, because when death occurs, they have to pay that death benefit out in a timely manner. So I will go on to say, and I don't want anybody to take anything I'm saying as the gospel, even though I know what I'm saying is the gospel because I eat, live, and breathe this stuff. But I want you to go do your own research. Nobody, nobody in your state or in my state or in any state of this country has ever lost money in a whole life policy in a mutual company that pays dividends. It's never happened. Go look it up. Go look it up.
why is
Now,
that?
now, the thing is, people say, well, so how about, I'm trying to think of like, I'm trying to think of the company. Like, oh my gosh, I drew a blank that lost money in
Oh,
an insurance company. It's not AG Edwards. What am I? I'm drawing a blank. I can't think of the name.
it's not
Um,
AIG, it's not Fidelity, it's not
no,
Voya.
no. Anyway, I can't think of the name, but it'll come to me maybe. But remember, they didn't lose it on the life insurance side. They lost it in the investment side. So a
Mm,
lot of these companies that are life insurance companies, they also have an investment side of their business too. Yeah,
mm,
their investment side can lose money, but your life insurance contracts have never lost money. That money is guaranteed to be there and it's contractually obligated. And the companies that I work with five primary insurance companies. Now I could work with more, but I work with five because in order to do the concept that we talk about, the insurance company has to allow you to put that money in and immediately access it. See, a lot of companies won't allow you to immediately access that money. They want to have you leave that money sit there for a year or longer. Remember what I said? You're going to access your money within 30 days, really sooner than that. But I
yeah.
just tell everybody 30 days because if it doesn't show up in like 2 weeks, I don't want you to get mad at me, but it'll
Mhm.
show up I mean, again, as I said earlier, you could get it overnighted to you if you really wanted it and just pay the overnight fee. But I just tell people 30 days. But on the insurance side, they've never lost money at all. The
Mm.
investment side, sure, because those are investments. Now, that's something you brought up earlier that I forgot to tap on. You said the word investment when we're talking about this. Remember, this is not an investment. When you put money into a life insurance policy, it is not an investment. We
Mm.
think it's an investment because it grows. It grows.
Oh, okay.
Well, okay, Ruben, the true definition of an investment is something that can go up and something that can go down. Your
Oh.
life insurance policy contract can never, never, never go down in value. As a matter of fact, it's guaranteed to increase and it's guaranteed to get better every day. In other words, today's better than yesterday. Tomorrow is better than today. That's not my flapping gums telling you that. That is in your policy contract. So it goes up. So it's not an investment. It is a process, a system, a method, a tool, a vehicle that you are going to use to make all of your investments. It is the process we're going to use to store all of our investments. Remember Nelson Nash wrote the book Becoming Your Own Banker? He
Yes, love
also
that
wrote
book.
this book, Building Your Warehouse of Wealth.
Mm.
Another book you should add to your wealth building library. And then finally, he wrote a book called The Case for IBC. IBC means Infinite Banking Concept.
Hmm.
Now, I want all your viewers, I'm hoping they all go out and find those books. I'm not going to sell you those books. Go find them wherever you buy them from. You'll pay the same price for the book that I paid. Maybe you get it a little, I find it for less. I don't know. Even this book, Becoming Your Own Banker, you could go out and find 2 hours of audio that go with it. So if you're like me and have a little ADD, maybe you want to listen to the audio. Now,
Mm.
Ruben, I wrote a book here about 5, 6 years ago
Oh
called
wow.
Mapping Out the Millionaire Mystery.
Hmm.
Mapping Out the Millionaire Mystery. This book I'm going to give to all of your listeners for free, the ebook version. You can go to my website, themoneymultiplier.com, or email me, Brent at the Money Multiplier. And any of you that want this book, I will send you this book, the ebook version for free. I'll even send you the hard copy for free. You just pay for the postage, but you don't need it. Don't waste your money on the postage for the book. Go just go take the ebook and print it out. So
That's
I'm,
awesome.
I'm going to give that to all of your viewers, mapping out the millionaire mystery.
I appreciate that. I appreciate that. So it's funny that you mentioned um investment because I always see an investment as something that can grow. And you kind of like, kind of corrected me that it's not going to go up and down. But I do see it as a resource. So speaking of, one message from my community says, once I have sufficient cash value built, should I be deploying policy loans into private money lending, purchase property, etc.? Could I, essentially start to double dip? I think is what they're
As
saying.
we sit here today and talk, I
Hmm.
don't have my sheet right in front of me, but I just did it for the end of December. I have like a $10.4 million lending portfolio, which means
Hmm.
I have about a little over $10 million loaned out to people. Two
Wow.
people. The interest rate I receive on that is usually between 12 and 16%. Okay.
Hmm.
So, for example, I'll just give you an example. There's a guy I loaned out for a house. I loaned him $1 million to buy a $1.6 million house.
Hmm.
He came up with 600 grand. I loaned him $1 million. He bought this house in Buffalo, New York.
Hmm.
His name is Joe. And I said, Joe, I'll loan you the money, but at the time he borrowed the money, my rate was 16%. So that means you're going to pay me $13,333 or $160,000 a year in interest on that loan, and you're going to pay me every month. So, where did I get that $1 million from? The cash value in my policy. So, what did I do? I went in, I took a loan from the insurance company of the policy. Now, let me be clear here. I took the loan. This is exactly what you do when you take your loan. This is what
Hmm.
whoever does this is going to do this. You're going to go to the insurance company and say, "Hey, Mr. Insurance Company, I want to get a loan on my policy." The reason you don't want to get a withdrawal is because then what you're doing is you're just killing the compounded growth. It could be a taxable event if you withdraw more than cost basis. You never ever want to withdraw from your policy. The only way you would want to ever withdraw and not take a policy loan is if you had zero people in this world that you care about or zero beneficiaries, and maybe you're 100 years old and you have no charities or nobody you want to leave any money to, then maybe you would want to withdraw. But I don't think most of us fit in that bucket, okay?
Yeah.
So you want to take a policy loan. So what do? I take a policy loan. Where does the policy loan come from? not from my policy. You would think it would come from my policy. No, I put my policy up for collateral and I take a loan from the general fund of the insurance company. So my $1 million in this example of cash value, I'm not pulling that out of the policy because if I did, I would be interrupting the compounding effect, wouldn't I? No, we put our policy up for collateral, borrow from the general fund of the insurance company.
And
I
that's, by the way,
I
Brent,
pay
that's
them
some.
say 5% to borrow.
Oh
Let's
wow.
just say 5%,
Is
okay?
wow.
The 5% is not compounded interest, it's simple interest. The money I earn inside of the policy is compounded interest, not simple interest. That is absolutely huge. That's maybe for a part two or a part three of our discussion. So now, on private lending, I borrow the $1 million from the insurance company. I pay to the insurance company interest only, let's just say 5%.
Mhm.
So I pay them annually. 5% on $1 million is $50,000. I pay them that interest. Oh, I used the money for a business purpose, didn't I? So do I have a tax deduction there? No, I do because I loan interest. Loan
Oh, loan
interest.
interest.
I'm paying interest to the insurance company.
Mm.
So and I paid them 50,000 and I'm using it for my lending business. But I lent the $1 million out to Joe. He paid me over the course of the year 160. Do I care if I pay the
Yeah.
insurance company 50 grand on out of this hand if I got 160,000 in this hand? Do I care?
No, no.
No. And not only do I have the spread, but I also have the whole $1 million that is still inside of the policy
Growing.
growing and
Uninter
compounding.
uninterrupted.
You are getting money on your money multiple times. There is another colleague on my team. You might have even heard of him or saw some of his stuff. His name is Devin Berg.
Mhm.
Devin Berg. If it just all right. So anyway, like if you follow him on social media, Instagram, Facebook, TikTok, all of that, he
Mhm.
goes by Mr. Burr, Mr_Burr, Brrrr. His last name is spelled Burr, but on all of that, he goes by Brrrr. So go follow Devin Burr. Devin Burr is a real estate investor
Mhm.
in the Scottsdale, Arizona, Phoenix, Arizona market. Devin Burr has done many, many videos and Instagram and TikToks and all of that about how he makes all of his real estate purchases by using the cash value in his policies. And he's
Wow.
able to use the money, the same money, Ruben, over and over and over again. So go follow Devin and watch what he's doing. But to get back to your question, absolutely. I use this for my lending portfolio. I own short-term rentals and long-term rentals, Airbnbs, VRBOs. I all of those properties that I bought, I use it through my policies and that cash
Wow.
flow comes in each and every month. As it comes in, I can, if I want, pay back on the policy loans, but normally I don't. Why don't I? Because the money that comes in, I send that money out into other deals.
For more work.
I send it in because look, here's what
Soldiers,
my
they're your
wife says.
soldiers.
Here's what my wife says. My wife says to me, she asks me about every quarter. She says, Brent, how much money, how much cash value do we have currently sitting in our life insurance policies? And if I give her a number that's too high, she gets mad at me. She says, no, no, no. I do not want that much cash value sitting in the life insurance policy. She says,
Mhm.
look, if anybody's going to be lazy and sit on the couch and eat bonbons, it's going to be me. It's not going to be my green men. That's what she calls her money, is her green men. She says, I don't want my green men sitting on the couch doing nothing. Get those green men to work. Because in her mind, if the money is in the policy, which is way better than having it in a conventional bank, because
Mhm.
you're not earning this growth in a conventional bank, let me
Yeah.
tell you. But still, in her mind, the money is still being lazy by sitting in the policy. She wants to put it to work. How do
Mm.
we put it to work? We do lending, we buy real estate. I mean, as far as other stuff that can make us more money. And
Yeah, yeah.
also, I'm going to tell you, Ruben, as far as just the thing is, when you start doing this,
Mhm.
you're going to have a lot more money to give away to charity. I'm not even going to share with you right now. I've got it on other stuff, but I'm not even going to share with you the amount of money that we have given away over the last 4 to 5 years. I've given money away, I mean, for a long time, but in the last 4 or 5 years, when I mean everything is dialed in, and I've really understood, even though I've been doing this for 16 years, I mean, 18 years in my own life, and every year I give, but in the last 4 to 5 years, my giving is seven figures. Giving is
Oh,
seven figures to
that's
charitable
that's fulfilling.
organizations.
That's very fulfilling, and I really appreciate you being transparent and sharing that because I think it puts it into context, right? Uh, you know the compound effect that happens and how when you receive or that return and again correct me if I'm saying anything incorrect because I don't want to be misleading, but the spread or whatever that you make when you put your money, you let it go to work and you lend it out, etc., and then the return, how that can compound into you investing into something else or investing into another policy. Like, I mean, it's just this domino effect of almost like this is why they call it infinite, right?
It is infinite. As a matter of fact, Ruben, so 91% of my clients that have been with me for 2 years or longer have more than one policy.
Mm.
More than one policy. Now, the reason I tell you that is because if this concept wasn't working for people, do you think 9 out of 10 would come back and buy more?
Right.
There's no way. They're not coming back to do more. This is a game changer in your financial life. Now, I'm going to admit it's a paradigm shift. If you try to call your financial advisor, your CPA, your tax attorney, they're going to be, what are they going to tell you? Hey, let's max out your 401k, IRA, qualified plan, right? I
Yeah.
don't do any of that. I'm not saying don't
Well,
do
why
it.
would, well, yeah, well, it's because you have new information. It's like almost. So let me ask you what. Let me ask you two things. 'Cause this is really I'm really excited we're having this conversation. Um, the so let's go back to what you said because that number was significant, right? You're on your 30th policy. You're lending around more than 10.4 million, I think is what you said, right? Out in the streets, just helping people.
Loan. Wait here. I want to be clear.
Yeah.
I'm helping people, but I have collateral on those
Oh,
loans.
absolutely. I was well.
If
That's
they
gonna.
don't pay, I
Yeah.
foreclose on their ass, right? So I
Absolutely.
have collateral.
You got liens, you got all these things,
Yes.
right? This is not like charity. And I know because I've worked with private money lenders. So, you have collateral, so you have your risk there accounted for. You're not just handing it out and be like, I owe you, right? Like
Right.
that'd be very, very high risk. Um, Now you do that. Could you give some context? Because I think that'd be so helpful for someone listening who's aspiring for like, okay, I want to get my second, third, fourth, fifth, five. And like you've been doing this for 30, 20, 30 plus years on this model. Or I guess 20 years ish, right? You've been starting 2006, if I recall, right? So, um, what's that cash flow on like if you're like because I know we talked about this a lot on the first episode where it's kind of like you look at your debt, you look at like when people look at your debt to income ratio, they look at like, okay, like here's how much debt you have, like this traditionally banks how they look at it. And when you think of this vehicle, you're like, okay, well, this is how much I owe. All right, well, here's how much I can make with this model, just for the interest of inspiration and context. When you have this kind of cash value that's available and you're lending it out on like a maybe 8 to 10% spread, it looks like. What's that monthly cash flow look like for an investor like you who's got 10 like, going on to being lent
Yeah.
out, and then what do you get in return?
And again, I'm completely open and transparent.
Yeah.
Most of my of just the stuff I currently have loaned
Mhm.
out is anywhere from 12 to 16%. I think I
Wow.
have an old loan that's like a very old loan that's like 9.5%, and I have a couple that are above 16.
Mhm.
But on the 10 plus million, just in my payments alone, and the majority of them are interest only. There's a few of them that are principal and interest, smaller ones, but I'm about at $131,000 a month in
Wow.
interest income that comes in just on that lending portfolio only. Now, the
Wow.
bad news for me on that is, that's all taxable income. So,
Mhm.
you know, I mean, anyway, the government makes sure that he knocks on my door to make sure that, I'm paying because he knows that kind of cash flow and that interest income. And to be quite honest, I don't have a lot of expense that goes against the interest income because it's not hard to do private lending, right? It's not hard to, well, right. So the thing is, it doesn't really require a lot of overhead to lend money. Now, I have some like rental properties, and that I have overhead on. I have maintenance and things like that, and property management
Mhm.
fees. And as a matter of fact, my wife and I are just discussing we're buying another, well, not yet, but we're discussing buying another property, a high-end property on it's on Southwest Florida, on Captiva, Florida. I
Short-term
already,
rental.
what's that?
Short-term rental.
Short-term rental,
Are you
Airbnb.
cost segregation, bonus depreciation?
They
Is that the
usually
goal?
do, yeah, there's usually week rentals. It made about, well, let's see. So last year it grossed about three hundred
Hmm.
thousand dollars in rental
Yeah.
revenue.
Yeah. But you can
The
offset your.
the one I'm looking at is
Mhm.
going to be, it'll gross close to 400 in
Nice.
rental revenue. That's what it's been, the track
That's
history.
luxury. That's
But
luxury, right?
the property that I bought in 2021 that I'm sharing with you, I bought that for 1.7.
Mm-hmm.
I could sell it today for about 2.6,
No.
right? I bought it in early 21, and the property that I'm looking at, it's going to be about $3 million to buy that property. It's going to gross me, let's just call it $400,000 of rental revenue,
Mm-hmm.
but it's going to net me after all the expenses, not taking into account cost seg or all that, but I'm taking insurance, property taxes, management
Mm-hmm.
fees, and it is on a barrier island, so it's hard to get to, but people go there because they want to get to that island. Let's just say my overhead is not going to be, but it's going to be 50%.
Yeah.
So you're thinking, well, Brent, why would you want to buy a piece of property for $3 million, have a 50%
Overhead.
overhead?
Mm-hmm.
So the 3 million gets you 200,000. Well, that doesn't seem like a huge return. Like, right, 200,000 in net. It's not as good of return that I could get with a lending deal. But the thing, I have the asset, I have the depreciation, I have the cost segregation. I'm not an
Yes.
accountant, or,
No, no, no. You're
but
making
I,
sense.
but these are all things that I'm starting to learn more. And I'm kind of ashamed to say, because you would think, me being the money guy, I would know more about this stuff. But I have just been recently, Ruben, learning more about cost segregation.
Oh, it's so super powerful.
This time last year, I couldn't even, like, just if you told me, said the word cost segregation, that would have been like speaking German to me.
Yeah.
I wouldn't know what
Well,
that
yeah,
meant.
no, it's for those who are listening, you guys can tap in. I think I had a few episodes with Terry Judge. Shout out to Core Advisors. We use those guys, they're the best. And it's to reduce your tax burden, right? I mean, anytime I hear an investor, and it's so funny you say that because one of my other mentors, Dr. Myron Golden, who makes about probably like 13 million a year or so, he's just getting into it now too, because he's like, wait a minute, I didn't even know this thing could really existed, and I've been sleeping on this. And so now I'm buying this new home, and we're going to repurpose this other home, and I'm going to use the studio for the podcast for that home. And like, there's a lot of strategic things that you can do on it to play defense, for lack of better words. So I'm so glad to hear you kind of putting a bow on this whole conversation, because it is, And it goes back to what you said. We're constantly learning. In our respective niche, it's one thing, but there's so much to tie it into pieces. Before I let you drop, I know we're over time here, but I got to ask you this, or else I kick myself, right? I in these books, the Rockefellers, how they were doing it. From what I understand, they were tying their policies and connecting them to their trust. So anytime someone passed away, the trust would get the payout, etc. We're in a position right now where we want to start really from an asset protection, start really getting into that. Have you kind of experienced, or I don't know, again, I know that respectfully, like there's some other experts out there that maybe you could speak to, but when
Yeah.
it comes to this specific product, have you seen and or have you experienced kind of making the beneficiary the trust so that you are kind of building that Rockefeller proof a family legacy for your family. Like, what's your take on that?
Yeah, great question. And just before I answer that, I'm just going to go back and I'm going to say, look, I am always learning
Mm-hmm.
from other people. I'm a question asker, and I'm just going to give you an example. I was out walking my dog yesterday morning, and I actually live in a subdivision where we have airplane hangars attached to our house. It's called Spruce Creek in Daytona Beach, Florida.
Oh,
It's actually
not a
called
bad
Port Orange,
neighborhood.
Florida. And so my neighbor, I hadn't seen him in a while. He came in, and his name is Todd, and he's from Kentucky. And he owns a coal mining business in Kentucky. He also owns a trucking company in Kentucky, and he makes a lot of money. He
Great
makes a
neighbors.
ton of money. He's the same age I am. We're exactly the same age 58. And I said, Todd, I said, my biggest challenge is taxes and stuff. I'm trying to, what things can you give me? And he mentioned this thing to me. He mentioned urban and rural opportunity zones. Now, this was less than 24 hours ago. He mentioned this to me. And he says, a lot of the people that I sit on the board with, he sits on the board at some major Kentucky organization, and he says a lot of the wealthy people they they help offset their taxes by doing urban and rural opportunity zones. So the next time you and I talk, I'm going to learn more about this because I always want to learn what the wealthy are doing. I've never heard of it before. I couldn't
Yeah.
tell you a thing about it today, but I was just throwing it out there in case anybody knows about it. Reach out to me, Brent at the Money Multiplier, and tell me about it. Just like I heard you mention core advisors for
Yeah.
cost
Yeah, I'll
segregation.
connect you with them. I'll give you a
Yeah,
direct connection. They're
that might
they're
be a good
solid.
connection. But yeah, so the point I want to make about that is never stop learning. No matter where you get in your wealth like window or your wealth ladder, whatever it is, how
Mm,
low you are, how big you are, I'm always asking people of like building wealth. Actually, my next door neighbor, um, okay, he lives right next door. Exactly. I could throw a rock into his house. His name is Gary. He owns a company called Rural King, Rural, Rural
mhm,
King.
mhm,
He owns like 162 of these stores, right? So, and I'm sure a lot of your viewers have heard about them. There are a lot in the Midwest and the South.
mhm.
They're kind of like home and garden type shows or tractor supply type things like that, right? So I'm sure some of your viewers have heard of Rural King. Well, every time I see him or I get the opportunity, and I run into him and I don't see him a lot because he's not here a lot, I'm always picking his brain. Gary, tell me about this. Tell me about this. What do I do? Things like that, right? So I'm always trying to fill my mind with stuff about how I can become better. But I know that wasn't your question. You asked about trust. And here's the thing I'm going to say about trust. I own trust. I have policies that are in my trust. Not all of them are in there, but I have policies that are in the trust. The trust can be the owner of the policy, and the trust can be the beneficiary of the policy.
Which one is
Um,
better?
no, well, yeah, it doesn't matter. It can be both. It can be owner and beneficiary, right? Because see, the thing you have is you have three things on a policy. You have the owner, you have the insured individual, and that's the person that pees in the cup and gives the blood, and you have the beneficiary. The owner and the beneficiary can change at any time, and they can change multiple times.
I didn't
The
know that.
only thing that cannot change is the insured individual. That's the only thing
Mm,
that can never change. So a lot of people will set their policies up to where the trust is either or both the owner and the beneficiary, because when they pass, instead of you leaving it to, like for example, my daughter Hannah Kessler, it's going to our family trust, for example. And then
Oh,
the trust now will be the beneficiary of the policy. They'll receive the proceeds, but who is the executors of the trust? It'll be the kids, right?
got it. And I'm
So
so sorry to ask a technical question before I forget. You couldn't be both the owner and the beneficiary, right?
No, not you as an individual, because if you are,
No, I
well,
mean, no,
wait a
not as
minute.
in, I was thinking, sorry, I'm asking from the
Yeah.
perspective of like, you couldn't have the trust be the owner of the policy and also the beneficiary, right?
Yes, you could. And I take that back. I said no, but I take that back. Look, for example, I own a policy on, right? So like I own a policy just on my children. I own it. They are the insured. I am also the beneficiary. So, God forbid my kids die. I own the policy, which means I pay premium into the policy.
Hmm.
They are the insured individual, it's on their body. But if they die, I'm the beneficiary.
And I'm assuming you have it the other way, the other way as well, where you are
Yeah,
also the insured and they're the beneficiary, because
yeah,
you have 30, so you
absolutely.
can mix and match.
I could never be the insured individual and the beneficiary, because the
Right.
beneficiary only gets paid out when the insured passes. So
Got it.
I can't be the beneficiary of a policy that I am the insured
Got
individual.
it. Yep, we're on the same
But
page.
the other ones you can be. Now, I
Interesting.
want to say something about trust. There's lots of noise out there about trust. There's lots of people out there that are salesmen selling trust. I'm gonna make this suggestion. Whenever you start a trust, make sure you get somebody that's authorized, like I would say a trust attorney, to review that trust to make sure that is legit. I have seen trust out there that people thought they were legit because they went to a weekend seminar and they started the trust, put the money in there, and they said, you can do this, you can do this isn't taxed, that's taxed. And they end up getting in trouble with that, right?
Hmm.
So, it's just my opinion and my
No,
suggestion.
thank you.
If
Thank you.
you are going to have a trust, have it properly structured by an attorney. Don't go to a weekend seminar and buy a trust from somebody that's selling a trust, so-called the trust expert. I'm not saying that person isn't the trust expert, but have all your ducks in the row when you do that, because you do not want to get into hot water with the IRS because your trust is set up wrong and you haven't been paying the proper tax that you should be paying on it, because your trust salesman, who is nothing more than a salesman, he's not a trust attorney, and again, I say trust attorney, there's other trust
Entities.
people out there, I mean, better, but just make sure that um, you have that trust reviewed and you have it double checked and triple checked, because the last thing you want is to have somebody coming on, knocking on your door, the IRS knocking on your door and say, well, let me see, this trust doesn't look like it's a trust that should be a trust, and it looks like it's
We
not
poke some holes.
conforming
Yeah.
with our tax laws. And you don't have to take my word for it.
Right.
You just go out there and you Google something like sham trust and things like that and all of that. There are a lot of crap out there going on with people, because see, the majority of people don't understand taxes. I don't understand taxes.
Mm.
I don't, when somebody comes and asks me about taxes, I just don't, even my own kids get mad at me because they want me to give them tax advice of what they should do. Hannah, Zach, I don't do taxes.
Mhm.
That's not me. That's not in my wheelhouse.
Yeah.
Let's go to the expertise. Let's go to the CPA, the trust attorney, or whatever it is, or right, for
Mhm.
taxes. I don't do
Yeah,
that.
no, I appreciate that.
Very important.
Lastly on trust, if I'm ever setting that up, are you suggesting that it's better for someone who's listening as well to get a second set of eyes on it? So let's say you are working with a firm, you would go to almost like a neutral attorney and say, hey, listen, I'm working with these guys. Can you just, cross T's and dot the I's? Is that what you're suggesting?
I, I don't think it hurts, but if you're working with a trust attorney, you're probably going to be good. The thing I'm telling you is there's a lot of people have, I mean, I've done this for a long time. I go travel at events, I see stages, and I've been at events and people get up and say, you know what, if you start this XYZ trust, you won't have to pay tax on any of your income. I mean, if it sounds a little too good to be true, it's probably too good to be true. And that's where I was at with the infinite banking concept. And it took me a while to learn, and I had to do my research. And here's what I always say: pigs get fat and hogs get slaughtered. So you don't
Mm.
want to be a hog, you just want to be a pig and just get a little fat. So don't do, I mean, just do your due diligence. Even with me, even if you become a client of us at the Money Multiplier and you allow us to serve you and you buy a policy through the Money Multiplier, I would expect you've done a little due diligence. You've been referred, you've checked us out a little bit. That's why I always say, don't take what I tell you. Go listen to all of our testimonies, our success stories, our plan designs, our case studies, and see what other people say about us. I can sit here and tell you all day long how great I am. But when somebody else tells you how we've helped them and how we're serving them and how we've helped them build wealth, it means a lot more.
Well, listen, I think that's a perfect segue because I got to give you your flowers back. When you told me about this, I took action right away, and thanks to you guys, I was able to leverage it in a lot of different ways to help our family. And right now, I'm next in line for another one, so you and I will be in touch as we're preparing to get some more. So first of all, I know where I can find you, Brent, but for someone who's listening, who's like, well, I gotta get a load of not only what Brent was talking about with the Money Multiplier team, but also all these resources,
Yeah.
etc. And your book, which I want to make sure we plug in there. What's the best way for the listeners or watchers of this amazing show that you were able to collaborate with me on? Where can
Yeah.
they get in touch?
Well, okay, so like a couple things. The thing you do is just go to our website, www.themoneymultiplier.com. It's THE moneymultiplier.com. I want you to click on Watch Brent Now. Watch that 90 plus minute presentation. There's also other things on the website you can look at. We have over 70 short videos on there. And also, so like go and watch my daughter's podcast. I know that you know my daughter Hannah. She has a podcast called the Money Multiplier Podcast. So wherever you download podcasts on, her name is Hannah Kesler. Go follow her. She's got over 130 plus episodes, records a new one every week. Actually, her and I just recorded a new one today, as a matter of fact. I also, too, would say that I don't know just when this is just getting out there, but at the end of February, I think the last day of February, first day of March. So what is it? February 28, March 1, there is an event that my daughter is putting on. It's called Money Game Live, moneygamelive.com. And lots of great speakers, lots of good content. It's going to be in Tampa, Florida. And I mean, look, man, come to Tampa at the end of February, beginning of March. If you've never been to Clearwater Beach, one of the best beaches. Oh, there you go. You got it up.
Yes,
Yeah, so
sir.
go there. So Hannah, and yeah, there's another guy, Larry, that's putting it on with her, Larry Steinhaus. There's a lot of different things you're going to learn. We're actually going to have Les Brown is going to be there, the speaker, Les Brown. He'll be there speaking as well. But yeah, that'll be an awesome event if you can attend in person. But then also, if you want to just reach out to me, Brent at themoneymultiplier.com. Brent at themoneymultiplier.com. Oh, and also on there, I saw Isabel Guarnerio. She is actually her dad was the late Gene Guarnerio. I always pronounce her last name wrong. I don't. So anyway, Gene and Isabel. Well, okay, so Gene.
Guarino.
Garino. Well,
Guarino.
anyway, Gene passed away with COVID, like what, back in 2020 or 2021. But anyway, so like Isabel has something called RAL. It's RAL, it's called Residential Assisted Living. So if you ever want to get into that space, Isabel is your go-to person. I speak on her stage. She has an annual event in Phoenix every other year. I speak out there at her stage. I just was there in October, so I won't do it in 26, but I'll do it in 27. But she's fabulous for assisted living facilities. I mean, again, I don't know as far
That's
as
so
where you're.
that's so
Yeah.
interesting because we just had a guest talk about that. I would love if you
Oh,
could coordinate an intro, I'd love to have her on the
I
pod.
will. I'll coordinate. I'll put here intro Ruben to Isabel.
That's awesome.
Um, yeah, but she's fantastic. But again, so come to that event in Tampa. Come to that event in Tampa. It's yeah, I mean, it'll be good. The juice will definitely be worth the squeeze, I promise you. But yeah, so or just send me an email, Brent, B-R-E-N-T, Brent at the moneymultiplier.com. And again, guys, I'm an open book. I'll share with you everything that I've done, my wins, my losses, I mean, all the mistakes I made that I wouldn't do again. Um, and I'll tell you the one thing is just to give you a little hint, I have a shirt that says if you're not first, you're last. I have a
Ooh,
t-shirt. If
love
you're
that.
not first, you're last.
Yeah.
So that means all my lending I do, I get in first position in the lending. Because if I'm
Mm.
not in first position, I'm last. Why
Mm.
do I say that? Because I've lent money on second position before. So what do you think might have happened? Yeah.
Lessons learned.
So that's why I'm always first. So
Lessons learned. Hey, the one thing that came up when you were talking about which I'm going to look at urban and rural opportunity zones, but I see you have Courtney Moeller who's speaking on oil and gas investing, and I know
yeah.
that there's a partner of mine who had purchased a large policy, and one of the ways he's offsetting also his taxes is the oil and gas investing
Yes.
write-offs, which I'm not familiar with, but I know that he's doing that, and that's something that you could maybe add to your layer of tax protection.
Absolutely. And that's something that I'm kind of in the process in right now, oil and gas.
Yeah.
And I'm just going to tell you why that is a little sour for me
Oh,
because
interesting.
way back when, and I'm talking way back when, I want to say 2008, 2010 in that area,
Hmm.
I just had a buddy of mine and he said, "Hey man, I got this good oil investment, this good oil well investment, and I put $30,000 into it."
Hmm.
And I said, okay, I'm going to do it. You're doing it. I'm going to do it. I put $30,000 into it, lost every dime. So, and then I was kind of thinking, oh man, but I don't understand oil and gas. So then I kind of thought, well, I guess I deserved it because I put my money into something I
I
really
didn't
don't
understand.
understand.
Yeah, rule of
So,
thumb. Rule of
so
thumb.
now I'm kind of like, I want to understand more about it before I do it.
Yeah.
So
It's
that's why I
fascinating,
haven't
isn't
done
it?
it yet.
It really reminds me of the be do have. Become the person that's able to do the thing to then have the thing. It's almost like this weird law of like until you take the time to understand it, it might not work for you. It might work on you before it works for you.
Yeah.
And so that's kind of a interesting reminder. And that happened to me in the past when like crypto or something like that. I didn't understand it, and I was like, I had a partner, and I kind of vowed and told myself that I will go all into what I understand. Now it's my duty and obligation to understand the new
Yeah.
material. It's not what it's because people do another thing. Well, because I don't understand it, I won't do this infinite banking stuff. Yeah, but you're missing out because you're not making yourself available to learn a new thing that can completely unleash and unlock a new part. So I think it's in our best interest to continue to be students of the game, I guess is what I'm saying.
Absolutely. Always learning, man.
Yeah.
Always learning. And
Yeah.
look, I always say God gave me two ears and one mouth, so I should be listening twice as much as I
Mm.
talk. I'm still trying to learn that trait and that
Yeah.
skill.
Yeah.
But yeah, I always want I right, I'm always intrigued about what other information, people can just pour into me. I'm always like when I meet someone new, I'm always asking questions. Well, tell me about you. What do you do? And then when we get into a little deeper, what kind of successes have you had? What lessons have you learned? What would you advise me, a younger person, or even an older person? What would you advise not to do that you did, right?
Mhm.
I always want to be open and have an open mind and listen and I don't have to agree, but I want the information and then I can do my own due diligence.
Well, Brent, It's been such a pleasure. Thank you for spending this time with us. I knew the second time would be good. I just didn't know
Yeah.
it'd be this good. So thank you for making the time, and I can't wait to maybe see you in flesh into one of these events. It's about time that we link up in person. But I love what you're doing with your family, your daughter Hannah. We'll definitely link up there. I love to see you guys
Yeah.
kind of in that together. And you're changing lives. Thanks for changing mine, and I trust that this show will continue to do just that and impact many more people.
Well, thank you for having me. I appreciate you allowing me to share with your community. I know you have many, many choices of guests, so I'm grateful that you asked me to be on, and maybe we can do a part three someday.
Oh, absolutely. Always welcome. Let's not wait another 5 years, right?
Absolutely.
That's
All
awesome.
right. Take care,
Thank you.
Ruben.
Experimentation, I believe there are two critical components that will help you achieve your goals very quickly and succeed. Number one, it's information like this that you received on a show, in an episode, and content that you can find on my YouTube channel or anybody's channel. And then there's a community. And the way we've been able to expedite our process, the way people in our community, who are people that we consult, mastermind members, whoever, they get the information on an episode like this, but then they also have a support, whether it's me guiding them or being guided through a community. There is an opportunity for you listening to be able to expedite your process or even expedite your results that you're seeking by being in part of the community. If that is what you're interested in, we at Experiment Nation happen to have a community devoted to helping maximize your occupancy and your profitability altogether, regardless of which market that you are in. And for that reason, you have an opportunity where you can go to experimentrealestate.com/submit if you're looking to work in an environment that can help you prosper faster. Call out any areas that you might not be familiar in, especially the blind spots. That's where a guide comes in hand, and I would be a pleasure and honor to be your guide. But in order to make sure you're a good fit, make sure you go to experimentrealestate.com/submit so that my team can go ahead and take it and see if you're a good fit to join the mastermind and the multiple programs that we have. In addition to that, I'm also now a YouTube partner, which means that I want to give you more access to information, more access to Q&As, more access to the questions that actually come out of our mastermind to help people expedite the process. We've seen people get anywhere from $4,000 to $5,000 to $6,000 to even $7,000 a month net on just one door by applying the strategies that we use by working with corporations and furnished accommodation in a very strategic way. So if you're interested, make sure you also subscribe, because I'm going to have different tiers that's on YouTube now that we've become YouTube partner, to continue to be the bridge to your success in your lab. And your lab means your life, your goals, or wherever you're trying to head. So make sure you also hit the subscribe button on my YouTube channel. That's youtube.com/real estate experiment. We'll be there. You can also look us up at Midterm Rental Insurance Experiment. We will be there. Make sure you hit the subscribe, because that's when you'll know the tiers that are available to you that make sense for you, your marketplace, for your results. Remember, you're only one experiment away. Let's build.